the Great Depression 2.0 meets the printing press, one way or the other, you have to pay your bar tab. The Bank of Russia came out and said they are going to start accumulating silver every day for the next month. It's the trade of a generation. You know, when someone says to you, you can double your position, it usually comes with great risk.
Welcome to another important video featuring the CEO of Miles Franklin, Mr. Andy Schectman. We're living in a financial storm, where debt is piling up at a staggering $3 billion per day. Inflation has become the weapon of choice, and gold and silver are the ultimate lifeboats for the world's savviest investors. Andy Schectman breaks it all down, from the shallow corrections in precious metals to the global shift away from U.S. treasuries. Are we on the brink of a Great Depression 2.0 or something even more chaotic? Let's dive in.
And I think that there was this sense that, and rightfully so, people after living in bizarro world for the last 4 years were just happy to have some hope of restoring the American ideals, which have been whitewashed. No matter what side you fall on, I think people were optimistic. And so the decline in the futures is, I think the traders started the paper price down, and it started hitting stop after stop after stop as the hedge funds covered, or sold rather. It allowed the commercials to cover. They covered almost 16,000 gold contracts at 100 ounces apiece. Do the math, it's a lot. They covered almost 6,000 silver contracts at 5,000 ounces apiece. It's a lot. So the traders took advantage. They've been getting destroyed over the last several months with the rise in gold and silver. There's still almost 200,000 contracts short on COMEX in gold, and about 33,000 short in silver. So they still have large short positions, and every dollar up in gold and silver, they were getting hammered. They used this as an opportunity to kind of level off their balance sheet. But here again, much like we've seen for the last several years, these corrections are very shallow and they come right back up. And that's because the rest of the world knows we're in a pinch, and they use these opportunities where the paper price is smashed down to buy and to take possession and take delivery of. And I think it speaks to the real demand for gold and silver. And we're not even talking physical in retail. We're talking on a much broader basis. The biggest money in the world understands that, I think, that this is a transition period away from things like U.S. treasuries, which again are getting eviscerated as the 10-year goes higher, which has been weaponized, which has risen by 500 basis points in a year, which is succumbing to inflation. And because of the weaponization and because of this inflation and ultimately, you know, I guess it's a long shot, but you could even say default risk. And what we did with Russian treasuries is default. I mean, call it what you want, call it sanctioning, it's stealing. We defaulted, and we used it to fund the Ukrainian war. And these are things, they're doing the same thing in the European Union. These are very provocative moves. And so the rest of the world is saying, I don't want to hold treasuries anymore, and I'll buy commodities with it. But they're very shrewd in the way that they do it. They don't buy it the way most people think they should. Just buy it all. Well, then the whole thing blows apart. Instead, they're doing it far more methodical, far more diabolical. They're playing the long game, and every time we're stupid enough to knock it down, they're there with dollars that are losing value and treasuries which are rolling off their balance sheet and using the proceeds to buy things like gold and silver, and boom, it comes right back up again. So it's not going to be straight line, but what we see with Trump is something we should be excited about. We should be happy that they're going to address all of the things that they are addressing, but it doesn't change the fact that one way or the other, whether it's orderly, where Trump were to do all of these things, bring back manufacturing, you know, in order to do that, in order to do the things that he's talking about, we don't have a manufacturing base. We don't have the facilities or the machinery. You'd have to build all that. That takes time. You'd have to train people. All of the things that he wants to do to become more of a protectionist country, if you will, America first. Well, that could send us into a Great Depression. Or maybe it's far worse than that, and he presides over some form of a reset. Any way you look at it, to get to the other side, and I'm optimistic. I really am. I'm optimistic for the future of the country, more so than I have been for the last 4 years. But that doesn't mean that we don't have to go through some event, whether it be orderly, which probably not, or somewhat chaotic, whether it be a depression or a hyperinflation or a combination of the both, where it's hyperstagflation, where the Great Depression 2.0 meets the printing press. One way or the other, you have to pay your bar tab. And I think that's coming, and I think the world understands that, and they'll choose inflation over the very, very difficult decisions unless they're willing to slash military, slash Social Security, slash Medicare, slash pensions, slash military or veteran benefits. They're not going to do that. And if that be the case, then it will only increase the amount of debt that is accumulating day by day by day to the tune of $3 billion a day increase. And even slashing all of the waste, the interest just on the accumulated debt is moving at such a pace that it will overwhelm by 2031 everything. It will be the largest line item across the board, only allowing them to make Medicare and Social Security payments, and everything else, all discretional items will have to be borrowed. And of course, that probably means higher taxes as well. So there will be pain to deal with. What that looks like, I don't know. And we'll get through to the other side. But what it also means is that we can expect, I think, a good deal of inflation, which should do very well for all commodities, and will probably do well for stocks and cryptos too. Probably will. But in terms of measuring it in ounces of gold, my belief is that all of these things will fall in terms of its relation to an ounce of gold. And the rest of the world is done taking our treasuries. The appetite for our treasuries is completely and totally gone. And maybe you bring in a Judy Shelton to one of the Fed governor positions who has enough pull to actually introduce legislation to do the 30-year treasury redeemable in gold, as she speaks of, to give some form of incentive to hold our debt, where you have to be out of your mind to buy a 10-year treasury right now. To me, it's uninvestable. Inflation being so much higher and there's so much risk in holding it, at some point, these kinds of things will need to be addressed. And when you have the level of indebtedness, we have the needing at least 10 trillion a year to finance debt that's rolling over and new debt. Who's going to buy all of those treasuries? Does it mean that ultimately it's the Federal Reserve, which is monetization, which creates hyperinflation? I mean, any way you cut it, we have to go through that period of darkness, of pain, of paying our bar tab. And I think there's no one better to administer that than Trump. But to think that the reasoning for holding commodities just vanished is a big mistake. And that's what the traders use to clean up a bunch of their short positions that were really butchering their balance sheet. The Bank of Russia came out and said they are going to start accumulating silver every day for the next month, adding it to their strategic stockpile. That was something that was somewhat shocking. We've never heard that from a government, really, to my knowledge, before. You have India that is who has bought, I don't know, between 8 and 900 million ounces of silver over the last 3 years. They're buying it at levels that far exceed any central bank purchasing. It's the trade of a generation. When someone says to you, you can double your position, it usually comes with great risk. I look at the silver play as one of the greatest asymmetrical risk reward trades I've ever seen, meaning low downside, high upside. Trump was, Musk was on with Joe Rogan recently and said that you could create, I think it was 100-mile by 100-mile grid of solar panels. You could power the entire United States. If you pull it up, just Google it, it'll pop right up. It's about a 20-second clip. And with a guy like him in there with that kind of pull, who knows what the future is for silver. I do know that when 8 commercial banks hold the largest short position that of any commodity traded on COMEX, as Ed Steer showed on an interview with your father not too long ago, you ask yourself, why the hell would they do that? Why would 8 banks be shorting a commodity like that naked, meaning they don't have the silver to back it up? For what reason would they risk that? And why is there between 4 and 6 billion ounces short on the LBMA? I think these kinds of manipulations that the West has been involved with for a very long time is being exploited by these countries slowly. So I think it's the trade of a generation. And I think the silver to gold swap is as good of a speculation as I've ever seen in my career. With, the worst case, you're stuck with silver. Who cares? But the likelihood of seeing a 40-ish to 1 ratio where its price is averaged for almost 200 years, that's just a double is reaching average. And that would still be 6 times higher than it's coming out of the ground at 7 to 1 and decreasing. And another 260 million ounce shortfall this year in silver, according to the supply demand numbers out of the Silver Institute, who again omit military usage of silver. This is why the banks are short.
Thanks for watching. If you found this video insightful, don't forget to like, share, and subscribe for more updates on the ever-changing financial landscape. Let us know your thoughts in the comments below. What's your take on the future of gold, silver, and the global economy? Stay informed, stay prepared, and we'll see you in the next one.